Hey everybody, Chuck Barone. Thursday, May the 18th, 2023. We got a lot of stuff to talk about today. Wow, it was a crazy day. We knew it was coming this week, at the end of this week here, and here we go. Before we get to the show, though, I want to welcome everybody to the show. Thank you guys for your support. You guys watching these videos every day. It's what keeps us going. We appreciate you guys. All right, so let's look at these markets real quick before we get into the news stuff. Markets had a good day today. Markets up across the board. This debt ceiling thing, looks like they're going to work it out, to nobody's surprise, I don't think. Market reacting in a positive way to it. Dow gaining 115, the S&P up 39, NASDAQ up 188, markets up across the board, yay, stock market. Bond market, not so much. Bonds selling off today. And it's funny because if the Fed's actually going to pause and the next move is cutting rates, it probably is not a bad time to buy bonds right now, but bonds selling off, so yields rising. The 10-year up 7 basis points at 3.65%. The 2-year jumping 10 basis points to 4.25%. Okay, so bond yields are up. The dollar, for some reason, I guess the yuan retreating under 7 yuan. Dollar rising like crazy, 103.53 now, looking strong. Of course, that puts big pressure on our gold and silver holdings here. Metals not having a great day today. Gold down $24.60, $1,957.30 per ounce. Silver down a quarter, 25 cents, at $23.48. And I got to tell you guys, even though it sucks with metals going backwards a little bit, these are still really strong numbers, and the dollar strength really surging from around 101 now back to over 103 and a half. Metals holding up pretty good in the face of that, so hang in there, guys. Oil today down 84 cents per barrel, not much in the market. $71.99 for a barrel of West Texas Intermediate, right in the pocket where we expected to be, between 70 and 75. So no news is good news, I guess. The Bitcoin today down $665, dropping back below 27,000 at 26,740. Bitcoin still holding on. I think it looks pretty good. The trend, though, it's looking like it's meeting some resistance here. I'm sure there's some guys taking profits who were buying at the lows at 16,000, but still holding its own, Bitcoin. I think once it gets its bearing, they flush all the weak people out, the sellers out, you're going to see a nice little rally here. All right, so that's the markets today. Kind of a mixed day today, but let's go to the data that moved everything today. Okay, so first thing is jobless claims come in. They were expecting jobless claims to be 254. They were up last week, 260 something, falling down now to 242, coming in below. Job market still strong. Not as strong as it was where they were under 200K, but just the fact that the number of unemployed claims is falling again. We'll see how long they can hold on to this right now, but the job market's strong. The Fed's going to look at this. Now you got big friction at the Fed. So we'll see how that works out, right? Some people are thinking more rate increases are necessary, taking their mandate seriously. Other people thinking that maybe it's time to pause. Some people I haven't really heard about any Fed governors talking cuts, but I'm sure in the quiet hush-hush stuff, they're like, when should we start? So anyway, jobless claims coming in today, pretty surprising. Also today, new home sales. We talked about that. Our existing home sales, we talked about that. Probably going to be down, and boy, were they ever. Cratering, down 23% from last year. Just a wipeout in the market. This is, of course, the end result of rate increases, because it was around last year at this time that the Fed really put the pedal to the metal on rate increases. Prices falling from last year 1.7% to a new national median price of $388,800. Now this is the biggest price decline year over year since 2012. Whoa, that's not a pleasant year for anybody that was in real estate back then, right? The record median was set last June, right at the end of the big real estate bubble with rates, super low rates, 413,800. So now you're down $25,000 from the median. And it's not really a big collapse. I think, truthfully, you're going to see prices, if rates stay high, you're going to see prices continue to come down. The biggest drops were all across the West: California, Nevada, Arizona. A lot of eastern markets still actually having price increases. Now, existing home sales have fallen now 14 of the last 15 months. And I'm telling you, they're likely going to continue to fall, guys. And it's not because people don't want to buy houses. I think that right now, you probably have more demand, pent-up demand on the sidelines to buy real estate than I can remember in years and years since I've been in this business. People want to buy houses. They just are shut out of this market because of the size of the down payment they would need, or even if they can make the down payment, the size of the monthly payment they got to come up with, even to just buy a regular old starter house. So the problem we have with existing homes is you have these rate prisoners. You know, a guy buys a house, even though his property's gone up pretty dramatically, he can't really do anything about it, because when he bought the house, interest rates were 3%. Today, probably around 6 3/8. So more than double. So what is he going to do? Is he going to sell that house? Buy something that's even more expensive with a higher rate and have a massive increase in his payment? No. Even people downsizing are seeing their payments shoot up from where they are, and that's with a bigger house. So, you know, I sit here at my desk all the time talking to people who want to buy real estate. When we go through it, you know, I figure it out on my calculator. Okay, here's roughly what the payment would look like on a median priced house here in Vegas, 430 grand, right? You put down 5%, okay, you got 20 something grand. Your loan amount's 410,000 roughly. And you're looking at a payment of, $2,700 or $2,800, and they just go. So I think that with the combination of so many people on the sidelines, demand for that's going to fall. I think that people trapped in their homes can't or won't sell. Going to diminish supply, and the supply right now is just ridiculously low. So, real estate right now is in a really weird, precarious kind of situation, because we've never had mortgage rates as low as they were, at least since I've been doing loans and started in '95, and I've been involved in the market since the mid-'80s. I don't remember mortgage rates being in the high 2s and 3s. So it's going to be very, very difficult. Those people are going to die with those mortgages, man. Nobody's going to get rid of that. And why would they? So the people who are going to sell their houses are people who have to move, right? They're relocating or whatever the situation is. But so diminished supply, that's why you see home builders. Remember, we talked about that yesterday. Home builders feeling all happy because they know that the competition from existing houses is toast, and that gives them a lot of freedom to raise their prices, to offer less incentives, to put the screws to their buyers however they choose they want to, because they're going to have the market to themselves, right? So interesting stuff in real estate over the past couple of days, shaping the market going forward. It's crazy. Okay, so Philly Fed comes out today. They're the Philly Fed monitors manufacturing in the country. Manufacturing tanks again. Bad news for manufacturing, more layoffs, less production, less demand. Down, just a horrible report. Now, this was interesting. I want to talk about this a little bit today. I was reading today. Okay, so we're all talking about this debt ceiling. The Treasury can't borrow money because they've reached their debt limit. They're depleting their own assets right now to keep paying the bills until they run out of money around June the 1st. And everybody's all excited. The market's all excited about, yay, we're going to solve this problem. We're going to raise the debt ceiling, and everybody's excited about it. Here's the problem. The Treasury is going to need to borrow $1 trillion by the end of the third quarter. They're going to just come in and literally vacuum up every little bit of liquidity there is in the debt market. It's just going to be insane, guys, okay? So their cash is all dried up because they were paying the bills, right? And there's no cash coming in. They can't borrow. Now they're going to come in and they're going to just not elbow everybody out of the way, and they're going to suck $1 trillion out of the market over the next 4 months. It's just going to be crazy. Bank of America analysts said that it's going to be the equivalent of a quarter-point rate increase. It's going to slow down economic activity. Banks are not going to have money to lend because the Treasury is going to suck up all that cash. It's basically going to drain liquidity dry. The debt markets only have so much money coming in, right? And then you got weirdness in the debt market too, because nobody really knows where the Fed's going with rates, right? And the Fed now, or the Treasury, going to be borrowing money here at basically the top of these rates. Freaking geniuses, aren't they? I'm telling you guys, it's crazy times. Now, guys who share this video, a lot of you guys watch Greg's show, and Greg's been talking about this liquidity crisis in the debt market. He's been saying that, watch the debt market, forget the stock market. It's all about liquidity. Well, here it comes now in real time. We're going to see what a liquidity crisis in the debt market looks like, because there's only so much liquidity there, and it looks like it's all going to be wanting to get sucked up by the Treasury. It's going to be unfriggin' real to watch it, guys, really. Interesting. I was reading today, here comes now the politicos, our frickin' retards in Washington. They're all mad at the Fed for different reasons. The Democrats think they're too tight. The Republicans think they're not tight enough. So everybody's mad at the poor Federal Reserve, those poor guys. But now we got the craziest stuff coming. So you got Elizabeth Warren, who's a big warrior for the left, right? And Rick Scott, a presidential wannabe, conservative from Florida, teaming up, guys, okay, on a bill to mess with the Fed. So here we go. Now the Senate getting involved. This is only the start, guys. This is only the start. I've talked about this many, many times about the pressure the Fed's going to get, especially if we go into a recession during an election year. Now you got Warren and Scott teaming up, dogs and cats sleeping together. I mean, what the hell's next, man? It's it's just a fascinating time. I guess you're always living history, but we're living a time right now that they're going to write about and laugh about, because I just don't think we're looking like the smartest we've ever looked right now, guys. Anyway, that's it for today. We'll be back tomorrow to wrap the week up. We appreciate your guys' support. If you like what you're hearing, please hit the like. It changes the algorithms. If you haven't already, subscribe to the show. Check your notifications. Ask your questions and comments. I'll be in the comment section later on to get with you guys and respond to your guys' comments and questions. We appreciate your support every day, guys. We do. We'll be back tomorrow to bring you the news you need. Until then, take care. Thanks.